The moment you deposit $1,000 into your bank, that money stops being yours. It doesn't sit in a vault. It doesn't wait for you. It immediately starts working, but not the way you think. And here's the shocking part. Your bank can legally use most of your money to make profits, while paying you almost nothing in return. So where does your money actually go? Let's say you earn $5,000 per month. You decide to follow the SMART rule. Save 10%. That's $500 every month into your bank account. You feel responsible, disciplined, financially secure. But here's what really happens behind the scenes. Banks operate on something called fractional reserve banking. That means when you deposit $1,000, the bank is only required to keep a small portion of it in reserve. The rest, they loan it out. Your $1,000 can become a $900 loan to someone else. That $900 gets deposited into another bank. Then 90% of that gets loaned again. And just like that, your original $1,000 can turn into $5,000, $7,000, even $10,000 in circulating loans inside the system. That's how money multiplies. But here's the catch. You earn maybe 0.5% to 4% interest. The bank charges 6%, 8%, sometimes 20% on credit cards. They profit from the difference. Your deposited money funds home mortgages, car loans, business loans, credit cards, government bonds, corporate investments, sometimes even Wall Street trading activities. Your savings power the entire economy, but the system is designed so the bank earns the majority of the profit. Now about earning 10% safely from a bank. Traditional U.S. banks do not pay 10% guaranteed interest. If someone promises 10% risk-free inside a bank, that's not normal. High returns usually come from stock market investments, S&P 500 index funds, real estate, bonds, high-yield assets. But those involve risk. Banks offer security. Markets offer growth. Big difference. Now let's talk about something most people ignore: taxes. In the U.S., your monthly paycheck can include federal income tax, state income tax, depending on state, Social Security tax, 6.2%, Medicare tax, 1.45%. If you invest and earn interest, you may pay capital gains tax, dividend tax, interest income tax. Even inflation acts like a hidden tax, reducing your purchasing power every year. So it's not just about earning, it's about keeping. Here's the real lesson. Saving 10% is smart, but understanding where your money goes is power. If you only deposit and never invest wisely, your bank gets richer faster than you. Money sitting still is safe. Money working smart builds wealth. The system isn't evil, but it rewards those who understand it. Now the question is, will your money work for you or for your bank?